Nothing like shooting the videos during the hurricane. The wind is definitely picked up out here, and we have some downed branches, some few little things like that, flooding in the street we're gonna see in today's video. But I'm starting this video at the same house that we've started this video at a couple times before, guys. And the reason I'm over here is because I just love coming by here and seeing what's going on. First of all, this sign got all messed up from the wind that we've been having. Gusty winds here, up to like 50 miles an hour in some cases. Right now it's like 30 miles an hour by the beach, so I'll take you guys over by the beach in my next video so you can see. But this house is for rent for $25,000 a month and has been since the beginning of June, and prior to that they were asking even more, like $30,000 a month. No one's renting it, guys. So like 4.5 months this place has been available for rent, and no takers. So I guess the strategy here is let's just leave it for rent. Let's put it on the market indefinitely, and maybe we'll never rent it. Not sure what people like this think, but hey, that's their problem, not mine. One thing we're seeing happening right now in the housing market is pending home sales continue to fall, guys. For the third straight month in a row, we have seen the amount of pending sales nationwide just continue to fall. In fact, in August, the pending home sales were down 24% on a year-over-year basis. And why are we talking about this? We're talking about this because this is the reality, okay? People don't want to acknowledge the slowdowns that are happening out there, but it's real, it's really going on, and somebody has to talk about it. I just love when people are saying the housing market is fine, nothing's going on out there, prices are still high, people are still buying, and some of that is true, guys. The prices are still high and people are still buying, but clearly a lot of people aren't. And this is how it all begins. These rising interest rates that we're seeing for mortgages right now are going to have a devastating impact on the housing market, and we're just starting to see the very beginnings of it right now. Look at all this flooding over here, guys. This street always gets pretty flooded. I came over this way today because, first of all, it's close to where I live, so I can easily get out of here in a pinch if the weather picks up again. But also, I wanted to just show you guys what the neighborhoods look like, and we didn't even really get slammed by this hurricane, guys. This is just you know, a small little bit of what the rest of the state is getting. On the West Coast, these guys are getting completely hammered. I feel really bad for Cape Coral, you know, Fort Myers, that whole area. Even Tampa's probably going to be getting a good amount of this storm, but nothing like Fort Myers is going to get. They're basically getting hit head on over there. So. And it's the same area that got hit the hardest during Hurricane Irma, coincidentally as well. A lot of people have been asking me, what's this going to do to home prices in Florida and the insurance market? And we'll see, right? Because we had Hurricane Irma in 2017, we had Hurricane Michael in 2018, and it didn't seem to have a giant impact on the markets when it comes to people wanting to move here. So it didn't really seem to damper down desirability like a lot of people think that this kind of thing will do. So we'll see if it's going to do that or not. But I think in some localized areas that get hit really hard, like if you look at Hurricane Michael, Panama City got hit extremely hard by that hurricane. And if you look at home prices there right now, it's pretty cheap. But it was already a cheaper area to begin with. But I think when you have a big weather event like this hit an area that's already kind of economically depressed, and that kind of just amplifies the situation. But in a much more desirable area like Fort Myers, and a ton of people have been moving there over the past few years, I could see them bouncing back a lot quicker than a place like Panama City. So what this drop in pending sales essentially is going to mean for the housing market is that we're going to see fewer closed sales as we enter the end of the year. And typically the end of the year like this is already a pretty slow time for the housing market anyways. As we get closer to the holidays, less people are moving. Usually summer's the big selling season where everybody needs to move before school starts, things like that, get settled in. And then as the holidays come, people aren't shopping for homes as much because people are starting to travel and take some time off, and most people aren't looking for a house. Even though sales don't come to a halt, they usually do slow down. And so I think this year we're going to see one of the biggest slowdowns we've probably ever seen. So that's my guess. That's what's going to happen right now. But this mortgage situation is not looking good right now, especially for the UK. In the UK, they had over 935 different mortgage products recently completely removed from the lending market over there, because a lot of the lenders are starting to get totally spooked by the housing market crashing in the UK. And what they're doing is they're increasing rates for existing borrowers and new borrowers, which obviously is going to happen to everybody everywhere, but they're also having declines in their home sales as well, because of so many lenders basically changing their mind. They're saying, well, we don't want to be stuck holding the bag here. So when you start seeing things like this happen with lending, you know that there's problems going on. Because if the lender's not even willing to give you the mortgage on the property because they're scared of the market, then that should be a red flag for anybody looking to buy that place, essentially. So you guys can see this sidewalk's a little bit flooded out. And we got a ton of rain last night. So right now, this is probably nothing compared to how it looked yesterday, late at night. And some areas around here even lost power last night. So, and we didn't even get a big chunk of this storm. We got a lot of these big outer bands, and you can see we're still getting a lot of wind from it. But like I said, guys, nothing like they're getting on the west coast of Florida. So one of the biggest concerns happening in the UK with all of these mortgage products simultaneously being pulled off the market is now borrowers are getting worried that this could push home prices even higher and borrowing prices even higher. Just like the insurance situation we have here in Florida, when there's less companies to go to for that product, naturally the prices increase, because when there's not as much competition, you're going to see higher prices. So people are going to be paying even more to get a loan on a property over there. And my guess is that's going to just completely tank the housing market in the UK. And already right now, before this was even going on, they're already predicted to see a 15% drop in home prices over there. So I would imagine that this new lending problem that just cropped up, because this just happened this week, that it's going to make the situation even worse for the UK housing market. Speaking of the Florida insurance market, we had yet another insurance company here in Florida be declared insolvent. This time it was FedNat Insurance Company, and right away they canceled 56,500 insurance policies, and they reached an agreement to transfer another 83,000 insurance policies to another insurer. And basically how this works is they're going to be on the hook for all the claims that were made prior to June 1st. And anything after that, the new company is going to be on the hook for those new claims that come in after that date. Talk about bad timing, huh? Two things in 1 week. First, we get this Hurricane Ian coming to Florida, and simultaneously we are losing another insurance company. So, and what's happening, guys, is the Florida Guarantee Insurance Association is going to be making assessments on insurance policies, because they cover the difference when these companies go insolvent like that. And basically all this is going to do is, just like we talked about in a previous video, it's going to make insurance rates for all different types of insurance go up across the whole state of Florida. So this really sucks if you live here right now. If you haven't had an insurance claim in a long time, you're going to be still paying higher rates just to compensate for all these other places that are seeing these big problems right now. Got another flooded out sidewalk here. Gonna have to walk on the other side of the street by this place for sale over there. I remember we saw this before. This listing for sale. This place actually sold last December for $19.3 million. They just never took the sign down. Trying to dodge the cars over here too. So I personally think it really sucks when you end up having to pay more in insurance, even though when it's nothing that's your fault. If you don't have an at-fault accident with your car, you didn't make any claims on your homeowner's insurance policy, yet you get punished because the whole ship is going down. So essentially, even if you made all the preparations you can to not make insurance claims in your life, then it doesn't really matter, because you kind of just have to contribute to the sinking ship. So I feel like that's what having insurance in Florida is really like right now. It's basically the sinking ship, guys. I'll share with you guys what happens to my car insurance whenever I get the next renewal. That'll be in December. I pay it off every 6 months to get the biggest discount possible. So we'll see what that's going to look like, and what the new homeowners insurance policy will look like next year. So hopefully it's not going to be crazy, but I'll definitely be sharing it with you guys. One thing that's kind of unbelievable also is a couple of the Fed chairmen are coming out and saying that this still isn't a recession, and they still think it might be able to be narrowly avoided if they just keep doing what they're doing and keeping a close eye on things and all this and that. But that just goes to show you that these guys are just not going to admit that this is a recession, guys. I feel like no matter how bad things get, they're just not going to admit it, because I don't really know what they're waiting for. I don't know, you know, what kind of other signals they're waiting to see to really declare this thing a recession. But regardless of whatever it is, it doesn't really matter, because everybody out there who's paying attention, who watches my channel and other channels that talk about this, they know that the party's already over. The recession has begun, but yet these guys at the Fed are still not willing to admit that this is going on. Look at this. They got like one of these pumps running over here, probably trying to make sure the street doesn't get completely flooded. Like I said, it was probably much worse last night than it is right now. And this is one of the only ways they can probably keep all this water off the street. It's even been tough for me to just walk around here and not be walking through all this mud. So to me, all this denial that the Fed is talking about with the recession pretty much just comes down to, in my opinion, that nobody wants to be held responsible. It's like the not on my watch mentality. Nobody wants to say that this recession is occurring under their guidance, because obviously that makes them look bad. Nobody wants to be held responsible for the economic downturn. But I hope nobody's being fooled by this, because obviously this is a complete joke right now that this is even still happening. We saw this property before last time we walked over here too. Huge lot for sale, totally empty. Remember, they were asking a massive fortune for this place. So just like a bunch of these other listings, probably just going to be sitting here indefinitely. Now, the affordability situation here for real estate in Florida has gotten so bad that they are trying to pass Amendment 3, which basically what it does is it's called like the Hometown Heroes Bill. And the idea is to be able to have more teachers, firefighters, active duty military, medical personnel, police officers, help people like that afford a house. Because with the median home price in Florida hovering around $400,000, a lot of these people can't even qualify anymore to actually buy a home when you look at their salary plus the interest rates that they have to pay now. What they want to do with this is they want to give everyone who qualifies for this type of program an additional $50,000 tax cut towards their homestead exemption, so it will lower the amount of assessed value that they can charge for their property taxes. And on top of that, they want to give away about $100 million in funding to help them get 0% loans. Now, it's unclear if it's a 0% mortgage or if it's a 0% loan to actually give people additional money, like an additional down payment, something like that. I'm not sure. I doubt it will be like a 0% mortgage. It's probably just a 0% loan to help people get into the home. So while I'm not against helping people in the medical field and police officers, firefighters, everything like that, the thing that I first think about when I hear this is, all right, well, that's great, but what about everybody else who also needs help that doesn't work in one of these kinds of jobs, right? I mean, I understand that those are important jobs for our community, but there's a lot of other important jobs out there too that aren't on this list. And I just feel like it's a little bit unfair towards other people who simply can't make enough money right now to qualify. And it's kind of like just favoring people who work in these specific sectors, really. And while I'm sure a lot of people who have these type of jobs are going to be happy about this, the thing is, to me, this sounds like just another subsidy, guys. So when you get more people into homes that technically can't afford one right now, to me, all you're doing is you're making the housing crisis even worse, because you're helping people that normally wouldn't be able to buy and help them to buy. Like we talked about a few weeks ago about parents helping their kids and grandparents helping their kids with down payments, or helping them get into the home by being a co-signer, something like that. So that's just yet another way to help people get into homes that maybe they technically can't really afford, or that they wouldn't be buying if it wasn't for these programs. And this is where my opinion probably differs from a lot of people, but I feel like they should just let the whole thing drop, Obviously, a lot of people don't want to see their home values get cut in half or anything like that, but I feel like it's the only way for us to get back to any sort of normalcy, guys. This whole market got completely inflated and pumped up to oblivion, to the point where nothing is real or even makes sense anymore with these prices. And you combine it with the high interest rates, people just can't afford it. It's that simple. So how do you fix this? Well, you stop giving people incentives. You stop giving them money. The Fed's already raising the interest rates, trying to stave off inflation and trying to curb demand. But when you see programs like this being added to the mix, it just exacerbates the problem. It just makes it worse, because they're doing exactly against what the Fed is trying to do. They're trying to keep the demand fueled. They're trying to keep, the fire going, essentially, instead of helping to put it out. So, like I said, I'm not against these people getting into a home, but think about it like this, guys, so you can really understand my point of view. If you are a firefighter, police officer, teacher, anybody who would qualify for this type of loan, wouldn't, instead of you rather being able to buy a house right now for like 450 grand at a 7% interest rate and needing to get help from the government to do this, instead of that, wouldn't you rather be able to buy that same house for 250 grand at like a 5% interest rate, 5.5% interest rate, and not need any help from the government, and not have an additional loan to pay back on top of your mortgage? That's probably what those 0% loans are. I mean, to me, it's a no-brainer. I think that's what everybody would rather have. I think all buyers would rather have that right now. But one thing we have to realize is the more help that's being offered out there and the more handouts that are given, then the less likely we're ever going to see that day come, because these type of programs just work completely against the interest rate hikes the Fed's doing to try to cool down inflation and the economy. So, and what's going to happen? Those guys are going to take even more drastic measures and probably be forced to tank things into oblivion, because it's going to be the only way. Because you're competing against these new local programs that probably other places are implementing as well to try and mitigate the home affordability issue. So while I can understand that the heart is in the right place for these programs, I just think overall it's a bad idea, because this is just another way to keep the markets completely propped up and more artificial and more expensive for longer, rather than just letting the whole thing collapse, let the free market do its job, and see where it goes from there. Because all this intervention, guys, just makes things completely fake, and you don't even know what the real value of a home is anymore with the way this is going. Even certain states, even here in Florida, they're going to be still giving out some child tax credits and to some of like the poorest residents, and there's a list of other states I'll have in the description below that are doing some form of still giving people free money, and they're doing this in the UK as well, still giving people free money under certain circumstances, either in the form of tax credits or direct payments depending on the state and the program. So these are the things I'm talking about, and you combine it with these programs that try to help people into homes, they're just making the problem worse, guys. No one's really acknowledging the real problem here, which is just too much money chasing the same homes. That's where we're at. It's too much money chasing all these houses. That's how we got to these prices to begin with. And the more we keep going down this road, the worse it's going to get. But I do still think that in the end, that these ultra high interest rates are going to prevail. And I think they're going to just continue to keep going up through the end of the year as well. So it's just going to keep curbing demand and curbing demand. You're going to see these pending home sales continue to fall, ultimately leading to less closed sales as well. And I think that's just going to be the continuing trend throughout the end of the year, probably into the beginning of next year as well, as the recession just gets deeper. If you guys enjoyed this video, make sure you are subscribed because we are heading over to the beach in my next video to check out how this Hurricane Ian looks like over here from Miami Beach on the ocean. I will catch you guys over there in the next video.